Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is about trade discount and sales discount. What is the difference between trade discount and sales discount? Trade discount, a percentage reduction from the list price. Quantity discounts to large customers. Usually, we have no journal entry for trade discount. For instance, I am selling a product, the list price is 100, but my customer is purchasing a lot of units, so I will sell it for 95. My sales revenue will be based on 95 instead of 100. So usually we have no journal entries for trade discount. However, sales discount. Whoa. Okay. Reductions in the amount to be paid by a credit customer if paid within a specified period of time. So sales discount is my discount after the sale. Is for credit sale. Intended to provide incentive for quick payment. For instance, 2/10 and/30. What does it mean? Meaning 2% discount, the first two here, if paid within 10 days, the 10 here. Otherwise, full payment might end within 30 days. Okay, and then how do we record it? We have two methods, gross method and net method. To know the difference, let's go to our Excel file. Let me increase this one a little bit better. So, what do we have here? Skype Corporation offer credit customers 5% sales discount if the sales price is paid within 10 days. Any amounts not paid within 10 days are due in 30 days. So these repayment terms are stated as 5% slash 10 days. This is my discount, and slash 30. On April 19th, there's a very special date because it's my birthday. Skype sold merchandise at a price of $45,000. So first, we will be working with the gross method instead of the net method. Okay, so gross method. Uh, we sold it 45. So debit accounts receivable, credit sales revenue. And here my gross method for my accounts receivable, debit 45 on April 19th. The customer paid 23,750. That is 25,000 less the 5% cash discount on April 30th. Wow, it's not April 30th. Sorry, it's April 25th. That is how it is in your Excel file, by the way. And how do we do that? So, cash, how much do we receive? 83,750. However, they are paying the 25, so we are reducing our accounts receivable in 25. And the sales discount is the number to balance my journal entry. So here, 25 less 23, $1,250 is my sale discount. And then the remaining balance we receive on May 15th. So here, gross method, cash, how much is the remaining? Sales 45, I receive it at the 25, so we have $20,000 is still to be received. And then we have here my accounts receivable is balance. And my sales discount is recorded on April 30th. So this is the gross method. How do we do the net method? The net method means we are considering that we will receive everything within 10 days. So we record here as everything is received in 10 days. This is to be conservative. So accounts receivable will be 45,000 times 95% because we are giving 5% discount. And then the sales revenue is also 42. Okay? And let's do it. So my we don't have sales discount here because we are recording the sales revenue by the net number. So my accounts receivable will be lower. So we are conservative here. April 25th, we received 23,750 83,750 accounts receivable. We have no sales discount here because we are working with the net numbers. However, on May 15th, we received $20,000 in cash. How much do we deduct my accounts receivable? If we deduct the 20, we will have a problem here because my T account will not be balanced. So we have a problem because this number, as well as on the gross method, it needs to be balanced. So how do we do that? Remember, we are working on the accounts receivable with the net number. So we need to record here my net number as well. So 20,000 times 95%. Now it is balanced. However, my journal entry is not balanced. So we record here a revenue that is the sales discount forfeited. Okay. And then we have our numbers and journal entries balance. Okay, guys, and which one is the best method? Either US GAAP or IFRS, they allow the companies to use both. So, which one is better? Sales revenue and the corresponding accounts receivable should be stated at the amount of consideration the seller expects to be entitled to receive. The net method typically better reflects that amount because the discount is a savings that prudent customers are unwilling to forego. Okay, however, it doesn't matter if you are in the US or any other country. For tax, we always consider the gross method. Why? Because we have sales tax and we can call it a very different names, but we pay tax based on sales. For instance, sales tax in the US, VAT in Europe, uh, IVA in Brazil. So we have a lot of different names here. However, our tax is based on our sales revenue. And my friend, the state, they will not want to receive less money. So we need to use the gross method for tax. Okay, however, for financial statements, we can choose uh, both. So we can choose net method or gross method. Okay, guys, so thank you so much. Subscribe our channel. You will be the first one to know when a new video arrives. Like our Facebook page, Accounting Hub by Dr. Scarping. Like this video. And if you have questions or comments, please email me or leave it here. And if you email me, my email address is dayscarping@gmail.com. Have a very nice day and God bless you.